Welcome to Credit Chat Live. Today we welcome Erika Giovanetti, who is the loans expert for U.S. News and World Report and a certified personal finance counselor. And in her career, Erika offers some fantastic insights on many personal finance topics, from mortgage rate trends to student loan debt. So it's just such a treat to have her today to talk about relocation. Just very happy to have you, Erika.
Thank you so much for having me, Destiny. I'm excited to be here.
Of course, of course. Thank you. So ever since, the end of the pandemic, we've been seeing, different moving patterns from the rise of remote work, rise in cost of living in general. I would definitely say people's needs have been changing. And I think we're just living in a time period where people are starting to flee these areas with high costs and just moving to areas with lower cost of living. So, with that being said, what financial planning and sort of budgeting tips do you have for someone who's considering making a big move this year?
Right. And looking further out for remote work is something that is we're kind of seeing it reverse, right? So there's a lot of relocating back to office because there's the return to office mandates for a lot of people in big cities. And whenever you're looking for, a place to live and you can live anywhere, because you're remote, there's, cost really isn't a factor. But now that people might be looking at moving closer to those big cities, you're either looking at a longer commute and that can take its toll financially, or living closer to the city and having that more expensive housing payment. And I think that that's just one pattern that we're seeing recently is people having to what they call drive till you qualify. So in other words, your job might be located in the middle of the city, but you have to drive further and further out until you can find a house that you can afford. And with mortgage rates being this high and home prices being stubbornly high as well, people are kind of having to drive even further. Keeping your long-term financial plan and your future job prospects, I think, is really important because while a lot of people may have moved more to more rural areas due to being able to work anywhere, now we're seeing people are dealing with those long commutes back into the office, even if it's only for a couple days a week. It's still something that you want to keep in mind. Really that forward approach to how you want to live your life and where you want to live. I think that another thing that's really top of mind for home buyers and, of course, home sellers right now, because once you sell your home, you have to find another place to buy, is going to be the mortgage rates. And with them being so high, it's really important to be able to shop around for a mortgage. Freddie Mac research estimates that when rates are high, you could save about $1,200 a year because of that rate dispersion. There's such a big difference between the rates that you shop for. You might get, a 7% mortgage rate from one lender and a 6.5% mortgage rate from another. So shopping around for a mortgage rate is really important. And just keeping in mind, if you're relocating to a new city, it's okay to rent for a while. In fact, it's probably a good idea to, especially if you're going somewhere where you've really never lived before, renting to be able to figure out what areas that you like and the areas that you can afford. Because buying a home, I mean, you're looking at somewhere where you're going to be for 5, 10 years, and that's kind of like a minimum. So you want to make sure that you're in an area that you can afford and that you will enjoy living in. So I'm all for renting first.
Awesome. Yeah, I would like to dive a little bit deeper into that renting versus mortgage. Like, what are the pros and cons that someone should weigh when they're trying to make that decision? Because, yes, it could, especially when you're exploring a new city, maybe renting is the better option because it gives you a chance to try maybe different pockets of the city so that you can decide what works best for you. But how can someone determine, okay, I'm ready to set roots here as opposed to renting, or what are some factors they should weigh in?
This is one of my favorite debate topics, I guess, is the rent versus buy. So I think that in many cases it's very oversimplified. You'll hear a lot of people saying that, home values only go up and that buying is always a good decision, but it's really so personal to you and your finances that there's no like one size fits all solution in the rent versus buy. There's no real winner per se. But I would say that buying makes sense. Just it makes sense when you can afford it and when you feel comfortable staying in one place for a long period of time. It really matters, how long you plan on living somewhere. You might even find that it's not really your lifestyle. You might want the flexibility of being able to rent because you don't see yourself in a city for 5 years or more. So I think that looking at, of course, how long you're going to be in a place, making sure that you can truly afford to buy because those starter homes are pretty few and far between in this housing market. And it's increasingly difficult to find something that might, be more in line with the average American salary. So finding a starter home can be difficult no matter where you are, but especially in these big cities. Making sure you can afford your monthly payments is, of course, super important. One fantastic thing about the 30-year fixed rate mortgage, and if you can afford it, the 15-year fixed rate mortgage, is that your interest rate and monthly payment stays the same throughout the loan term. People who are looking at adjustable rate mortgages, they might think, oh, I can afford this monthly payment now, but when you're looking down the line and your rate adjusts, can you make sure that you can afford your monthly payment? So I think those are a few of the main things to consider. But, in general, I feel like there's been a pretty bad stigma around renting where it really doesn't need to be that way. Of course, the good part about having a mortgage is having those fixed monthly payments over a long period of time. So thinking about taking out a mortgage in, for example, if you were extremely lucky in 2019 or before, your monthly payments are going to be extremely competitive with the going rents right now. But, if you're looking at taking out a mortgage now, the trade off isn't really in favor of buying a home. You will probably be able to find a better deal on a rental in the way that the market is right now. But, if you're going to stay in that house for more than 5 years, then by the time that you've been in the house for a while, rents will likely be higher. And, it might be looking back, with inflation, with rental inflation, I'm getting a great deal and I'm building equity. So yeah, there's a lot to consider with the rent versus buy debate. But I would also throw in one last thing. If you want to buy a house right now, you have to be pretty motivated. Between the mortgage rates, which just, kind of managed to bump up those monthly payments and, still having a relatively limited inventory, especially in single family home for first time home buyers. You kind of have to be prepared to maybe not get everything that you want in a house. I will say that things have improved. It's not the feeding frenzy of like 2021, 2022, but there are still some markets and some home price bands in which you might have to think, am I willing to, waive the inspection? Am I willing to waive the appraisal contingency gap? And these are things that really have huge financial implications. So just making sure, I guess, to have the most educated real estate agent, loan officers, and any sort of, just drinking up information and advice anywhere you can get it. But working with those professionals, you're paying them to help you and help steer your finances in the right direction. So I think that also getting a third party opinion, somebody who's not your realtor and somebody who's not your loan officer, some sort of financial planner if you have one, it'll be worth getting that perspective as well.
Yeah, I know when we were looking for our house, my husband and I were like, yep, we're going to get it should be a turnkey house. We don't want to have to do too much to it. And then we started seeing the prices for turnkey houses.
Oof.
And we're like, okay, we just need a house that we don't have to completely demo to live in our price range, please. And it was just like, okay, we have to remodel 3 of the 4 bedrooms or two of the 4 rooms in our house. So that's good enough for us. Let's put an offer in.
Yeah, quite a large change of heart, and that is really how I felt too. I think that another factor, people who are looking at homes right now, you kind of have to not just be motivated to buy a house, but just have to kind of enjoy living in a house. I think that that's uh, maybe kind of a universal experience. It's not just, for the time that we live in right now, but maybe it's amplified a little bit. It really helps to enjoy doing the things that come along with home ownership. So, home maintenance is always more expensive than you will think. Home repairs and just knowing that your monthly payment is a beginning.
Yes.
Absolutely. And I really, really liked your analysis, like the pros and cons. That was very, very thorough. So good. I learned a lot. And, there's definitely a lot of stigmas with renting, which really shouldn't be there. But it also depends on your needs as an individual. If renting makes more sense versus getting a mortgage, there's just so many different factors. And there's also a lot of stigmas behind mortgage, taking on a mortgage, buying a home in this economy, as a lot of people like to say. So just with that being said, I'm sure many people who are listening and considering, should I buy, should I rent, should you actually wait for mortgage rates to fall before buying a house? Does that make sense? Or does it just go back to, it depends on your needs?
Yeah. So, in, I guess, the past maybe 5 years, mortgage rates have really come to the forefront of the home buying conversation. Probably before, 2019, your mortgage rate was just something that you paid and you sucked it up because it was just part of the mortgage process. It's like, you know, you're not worrying about it too much. And then whenever the pandemic came around and interest rates were at record lows, all of a sudden mortgage rates had like this outsized impact on home buying. Um, I think that the saying, marry the house, date the rate does still apply though. So what that means is just ensuring that you are buying a house that you can see yourself living in for a long time, and maybe buying a house that you could see yourself living for longer than you might expect because you just don't know when you're going to be able to move. Um, but having, your rate is basically, it's a secondary concern. There were a lot of people, I believe, home buyers during that time when the rates were so low and they were buying a house because they were able to get this really low rate and they were paying a lot of money just to be able to get these low rates and houses at low rates. But just remembering that you are in it for the long haul, no matter what current mortgage rate trends are like, that's kind of a secondary thing to look at. We've surveyed home buyers, and last September we had a survey of recent home buyers, and I think it was like almost 90% had said that they planned on refinancing after buying their house. So people who are looking at these and you're thinking, I want to buy a house, I'm going to really rely on refinancing, that buy now, refinance later. That's, you get into some really dangerous territory, I think, there, because I am the kind of person who I report on this, every month I do a mortgage rate forecast update, and I have just seen the way that it's gone basically since the beginning of 2023. Everyone thinks, all right, this is when mortgage rates are going to start to come back down. They're going to start to come back down at the beginning of 2023. All right, mid 2023. All right, it's 2024. And now that we're in June 2024, it's not looking like rates are going to drop below 6.5% for the rest of the year, just because the strength of the economy was so unexpected. So even the most seasoned economists have a really hard time trying to determine where mortgage rates are headed. So, just your average home buyer, you can't put that on yourself and expect to be able to, I guess, time the market. So just being really careful not to fall into the buying at the right time. The right time to buy is when it's the right time for your finances. The right time to buy is when you can afford it, and just be careful of that. Buy now, refinance later, because I think that there was maybe a point in time when people were hearing this. I don't know if it was from their real estate agents, their loan officers. Actually, in our survey, we found that a lot of people were hearing it from these sources, that they could buy now and refi later. That's maybe where that third party opinion comes into play, getting somebody who doesn't have something to gain from you buying a house. But, you know, I think that just as long as you're going into it realistically, saying, all right, I'm going to buy a house, rates are 7% now. It's not perfect, but I can afford it and I'm not relying on refinancing later is a generally smart move. One other thing that comes along with like waiting for rates to fall is just that there might be more competition if they do. A lot of people have kind of just been waiting, and we've surveyed home buyers for this as well. Like the vast majority of them say, oh, I'm waiting for mortgage rates to fall before buying a home. We asked them at the beginning of 2023 and then at the beginning of 2024. So there's a lot of people just kind of on the sidelines waiting for conditions to improve. If you're waiting for rates to fall, you're going to have some company. But at the same time, if you can't afford to buy a house right now, then don't feel pressured to do so. I mean, don't put yourself in a financial situation where you're going to be overstretched, because it's even when you buy a house and you can afford it, when you first take out that mortgage and you first, move into your house, it's kind of tough to think, wow, I have this really big debt hanging over my head, this really long-term loan with a crazy amount I could never afford to pay at once. You want to make sure that you can afford those monthly payments, or you're just going to end up feeling a whole lot worse about buying a home.
Oh yeah.
Absolutely. And we talked about the mortgage rate and the mortgage itself, but what are some of the hidden costs as somebody's evaluating if this is a right financial move to make for themselves? What are some of the hidden costs outside of those factors that consumers should really consider?
So this it kind of goes back to mortgage rates, so I apologize, but I think, it's something I was discussing this with my dad 2 nights ago, and it's discount points. So this is especially while you're shopping around for a mortgage. It's so important to, first off, shop around and get pre-approved with multiple lenders, but to compare your loan estimates. So looking at those discount points. One lender that you're shopping with might tell you that they're able to get you a 6.5% rate, which is, rates are almost 7% right now, and 6.5% sounds so great. But what they're not advertising is that that might include a lot of money upfront in mortgage discount points. So the way that I'm sure that most of our listeners probably know this, but I'll give a quick recap. The way that discount points works is you use them to buy down your mortgage rate by paying a cost upfront. It's usually for like every quarter of a point that you're able to bring your interest rate down. It costs like 1% of the loan amount. And that's like referred to as 1 point. It's not, always a one-to-one comparison, but that's a pretty good estimate to start. So let's say you're buying a house that's $200,000 and you want to bring your rate down from 7% to 6.5%. That would be 2 discount points, $200,000. I guess $200,000 loan amount. You're looking at $4,000 upfront in discount points. We'll have to check that math just in case, but I'm pretty sure I got it right.
Right.
So that's like an upfront cost that you're paying for, and you are not going to be getting it back in any way. So you just have to kind of make sure that the discount points are worth the long-term savings. Finding your, I guess, break-even point is an important part of it. So making sure, hey, I'm paying this much in discount points and upfront costs, and how long would it take me for this interest savings to pay off? Would I need to be in my house for 4 years to break even? In that case, it might not be worth it, because, in 4 years, chances are mortgage rates will fall, because they do fluctuate over time. Chances are you would be able to refinance, even though, of course, refinancing does come with its own costs. But that's just, that's one thing that I would consider kind of more of a hidden cost, because people don't talk about it as much. Your loan officer might not even, you might have to ask, like, well, what are today's rates? But if I don't want to points? Like, what is the rate without points? And that's when you'll find a really good comparison. And finally, just going back to that comparing loan estimates. Your loan estimate will have your closing costs, discount points paid, and everything on it. You can find your APR, annual percentage rate, on page 3 of your loan estimate once you get pre-approved. That is a more holistic cost of borrowing, so it includes the interest rate as well as any fees. It's a really great way to be able to compare apples to apples whenever you're looking at different lenders. And it can be quite a big task, but really that loan estimate is going to be your friend in helping to determine the actual like best deal for a loan. And finally, on page 2 of your loan estimate, that has your fees like appraisal, fees that you could shop around for, as well as fees that you can't shop around for, because the costs really, they vary wildly. It's a lot of homework, but I promise it pays off. I've been there. A lot of us home buyers have been there, and it can really save you thousands of dollars if you're shopping around smartly.
Yes.
Wow.
Thank you.
Amazing, amazing to know. I kind of want to get into the conversation of credit, in the role of home buying versus renting. What role does credit play in your credit score? And how can consumers actually use maybe a higher credit score to their advantage?
Like with many other things in life and most borrowing products, credit matters a lot. The good thing about buying a house is and taking out a mortgage is that there are options across the credit spectrum. So you're looking at government-backed FHA loans, accept scores as low as 500 with 10% down, which is a great option for people who might fit that profile. But having a higher credit score is going to really widen your opportunities for the type of mortgage you can get, as well as the mortgage rates you can qualify for, which of course is going to save you a ton of money down the line. So although there are options for people with fair credit, bad credit, trying to get up to that very good to excellent credit, those bands are going to help you to get those lowest mortgage rates available. I think that, being able to, especially if you're looking at a jumbo loan, a non-conforming loan, you're looking at buying a more high-priced home, or even just, a conventional loan versus a government-backed loan. It really opens up a lot of doors whenever you have a higher credit score. So, of course, it's very, very important. I think that looking at various mortgage types for people like across this credit spectrum, there's also USDA loans, VA loans. Any government backed loan is going to have a lot more options. But when you have very good, excellent credit, it really, you can pick the loan that works for you, and you can have that competitive rate. You can have a lot more leverage when you're shopping for a mortgage rate and negotiating a lower mortgage rate when you do have that higher credit score. So it's important, of course, anytime you're borrowing money, to have your credit score as clean as you can get it. I'd recommend well in advance, if you think maybe I'll be buying a house down the line, 6 months down the line, a year down the line, getting a copy of all of your credit reports. You can do it still weekly at www.annualcreditreport.com. Checking them for errors, disputing errors if you can find them, and of course, all of the good credit habits that we love, keeping your spending low, keeping your old accounts open, avoiding opening new accounts, especially if you are already like well into the mortgage process. You don't want to be opening any new accounts. It can really mess with the underwriting, and it could, totally thwart all your plans. But keeping your credit utilization low, continuing to make on-time payments, and if you are in the position where you just don't have enough time, or you really can't get past, a certain credit score, there are options, looking at those government-backed loans, as well as looking for programs in your state. I think that one of the more overlooked programs is going to be just like the one in your backyard. So seeing your state's Department of Housing to see what kind of first time home buyer loans they might have, or just loans that are more geared toward people who are either low income, bad credit score. There are a lot of options out there, and finding a good loan officer who can walk you through all your different options is really important. And finding a loan officer who lives where you live and who lives where you're buying a house, especially because they can help you identify programs that you might qualify for if you don't have stellar credit.
Awesome
Wonderful.
advice.
Yes. All amazing tips. I love that you talked about the government loans and all the different options available, because a lot of people, they just think go to their local bank or they work with their realtor on writing out the loan process. So really fantastic tips there.
One resource to add is credit unions. Always, whenever you're borrowing any type of loan, go through your local credit union and see what they offer. They also offer mortgages, and especially if you have, like I mentioned, your local loan officer at your local credit union, they're going to be well versed in the things that you can qualify for, which is of course just so important. But I'm a huge fan of credit unions. They are nonprofit and member owned, so they're able to get you the most competitive rates, and they're able to work with borrowers across the credit spectrum as opposed to, your traditional. But I would always encourage shopping around with different types of lenders. So you're going to look for your online lenders, your credit unions, your brick and mortars, and banks that you already have a relationship with. That's who I ended up going with. I shopped around with like 5 different lenders, and the loan officers were probably so tired of hearing from me. But, I ended up going with a bank that I already had a relationship with because they were able to give me the best deal on a mortgage. So really go through all your options, but don't forget about your local credit unions.
Yes, I'm a big fan of credit unions. I have my loan
Awesome.
through my local credit union. And when I was going through the process, that my realtor had a relationship with a person that, or that, they work together often. There's often the loan officer that can help them to navigate the process. And so he recommended his person, but his person was going to charge me 1.5% higher. And he kept pushing and pushing. And I was like, that's potentially hundreds of thousands of dollars more on my loan. There's no way I'm going to do that. So just having all of those offers available to me to know that I can make an educated decision on where I wanted to go was very helpful.
Definitely. Got to find those
Certainly.
people who you could trust.
Yes. Now, looking at the housing market as a whole, what long-term trends are you seeing in the housing market that are becoming more evident, and how might these affect, future relocations or moving?
One thing, and this is kind of, I think I feel kind of relieved because it is a departure from what we've been dealing with before, is that people are starting to kind of normalize with the mortgage rates. Home owners who had been putting off selling for so long because they were like, it's not a good market, I can't get a good rate if I buy again. Those people who had been putting off selling, they're finally like, you know what? I need to move at some point or another. People need to move, whether they are relocating for work, whether they're downsizing in retirement, or whether they want a bigger house for a growing family. There's always a reason why people are moving, and the reason is never the mortgage rates. So I think that uh, seeing a little bit more separation, people are kind of becoming more accustomed to them. They're expecting them. They're getting used to them. So we're seeing a little bit of a return to quote unquote normal in the housing market that we haven't seen in a long time. And that's one thing that I think we'll see going forward is just going to be less volatility in mortgage rates. And that really trickles down to less volatility in the housing market as a whole. I'd really be happy to see more people being able to get in homes that they can afford because there's less of a feeding frenzy. That's more of me being hopeful. I think that as a whole in the housing market, we're still going to have a little bit of imbalance between supply and demand. After 2008, there was just a lot less home building going on, especially for starter homes. I will say that the inventory has improved a lot since 2021, 2022. I think that people can expect to have more options, even if they might not be able to have a much cheaper price. They'll at least have more options to choose from and feel like they're getting a better deal on their home compared to before, and not waiving those really important contingencies like home inspection and the appraisal gap. Because I, you know, even when I bought my house in 2022, which was still a pretty competitive time considering I was buying before the mortgage rate run up, uh, I knew that that was my line with my realtor. I didn't want to have to waive the inspection. I didn't want to have to waive the appraisal gap contingency. And that caused us to lose out on some houses that I still think about. But I didn't want to like stretch myself and make us uncomfortable if, we buy a house and it doesn't appraise for the sales price. We don't have $50,000 in cash to bring to closing to make up for it. So I think that one trend that, home buyers and sellers can expect is just a little bit more normalcy and not having to bid way, way, way over asking, waiving these really important contingencies that are there to protect your finances. When you're selling a home, you also have to buy one.
Yeah.
That's a lot of the sellers, they're sitting on like a mountain of equity, and they have these really low mortgage rates, but there's really nothing that they can do, because if they go to buy a new house, their monthly payments are going to be so much higher. So it's a little, whew, the balance is good, but a lot of people are like locked in to their houses right now. They can't afford to buy at, current rates and home prices. And we actually recently did a survey about home improvements, and that, we found that a lot of homeowners, they aren't selling their homes, they're staying in them, and they are making home improvements. They would rather pay to make the space they live in into their dream home than try to afford their dream home, buying a new one, because it's just like it can't happen. It's a lot of sacrifice. Depending on whether you are a current homeowner or a just prospective home buyer who is a first timer, you're renting right now, it really changes the stakes for your situation when you're going to be looking at buying a home, selling a home, and relocating. Ultimately, it's something that I feel like I might sound like a broken record, but it's such a personal decision. It varies so much from one person to the next.
Yeah, I've seen a lot of, we said that there was a lot of underbuilding, and so it's that the what's available versus the market, or who's in the market. I've seen a trend of a lot of condos being built everywhere. So it seems like we're building up instead of building out. So anything that you could speak to that aspect of it? Now it's not just renting, it's home buying. Is it potentially also condo buying? Like what should people weigh there?
Certainly. And I'm a huge proponent of housing density. And I'm located here in Richmond, Virginia, but I'm close by to DC, and my family in DC, my work in DC. Buying a condo is absolutely an option. And for a lot of people who live in these big cities, buying a condo is kind of your only option, because the single family homes just aren't there, because there is the really big density. So buying a condo, it also gets a huge amount of stigma, not necessarily deserved. One big factor you're looking at with condos is the homeowners association fees. So you think about HOA fees, you think about white picket fences and, manicured lawns and getting fees for like leaving your trash can out on the curb. But HOA fees are huge in condos. So you're looking at, you know, depending on the city and the type of condo you're looking at. I could personally say that I was shopping for condos before we ended up in our house, and some of those HOA fees are like over $1,000 a month. And granted, this is in DC, so that's like the most expensive city to live in.
Yeah.
One of the most expensive. There, once you get up to that price, they're all the same, unaffordable. But yeah, looking at HOA fees that are like upwards of $1,000 a month. So that's one thing that you really want to look at, especially because your HOA fees can go up. You're looking at, when we talk about like mortgage payments and the cost of owning staying fixed, we're talking specifically about the principal and interest payment. Whether you are buying a condo or a house, your housing payment can still go up because your taxes might go up. Your escrow payments, with your taxes and with your home insurance might go up. And with condos, you're also looking at HOA fees. Yeah, I would certainly, condos are certainly a good option where they're available. And like I said, there's a lot of stigma against buying a condo. I think that that's from the people who like to mow their lawns, which I don't. I still think, man, I would have been better off in a condo, not having to, spend an hour. And that's me splitting the yard work with my husband. So, like, if I were doing it by myself, it would take all day. Condos, it's more of a lifestyle. It's more of a lifestyle choice. And I think that this is where that conversation about home ownership, and quote unquote, like wanting, like you must have to be really motivated to be able to buy a house right now. It's not just a financial decision, it's a lifestyle choice, how you live, like where you want to live. And buying a condo just goes into the same, to that same category, in that if you want to own, but you don't want, to take care of a big house, a condo is a totally valid option. It's one last thing that I think is, condos kind of have a benefit, sort of an upper hand, and it depends on where you live and what the rules are like where you live, if it's a townhome, a duplex, an actual condo association. But you might be able to rent it out a little bit easier than maybe a large house. And of course, like, maintenance costs are going to be a lot lower when you're buying a condo. Some of the maintenance costs are going to be baked into your HOA. So if there's something like, if you're living in a townhome and they need a new roof, it's going to come out of the fund. That's something that you pay toward with your HOA, but you might have to pay more towards it as well. It really varies so much. And I would say, because it varies so much, it's important to look over the HOA handbook, like, because you just don't want to be in a situation where it's unclear what the finances are like. So looking over the HOA rules and any other sort of guidance that comes along, especially if you're doing something like a co-op, because they can just vary so much, and have someone else, have another professional look over it with you. Unlike just, buying a house that doesn't even have an HOA, that's like an extra layer of complications and a lot of opportunity for, financial mishaps to happen that you didn't see coming or you weren't expecting. So that's one thing to consider with condos. Like I said, I'm a huge proponent of housing density and not doing yard work, for one.
Love that. Same here. I totally agree with you. Erika, is it okay if I throw in a question that's just related to kind of your opinion? So, in the beginning of the conversation, we kind of just talked about the different demands with the economy and how people are just fleeing certain areas. When we talk about those high density areas like Washington, D.C., and that have higher cost of living, Los Angeles, even New York, I'm seeing that people are fleeing some of these areas. It's a recent trend that I've seen. What are some of the areas that some of these people are fleeing to in the US that you are recognizing?
Oh, man. Everyone who lives in my city is going to crucify me for this, but Richmond, Virginia is a big one for DC suburbs. And it really depends on like which city you're thinking about. And if it's people who are looking, I want to, start a new chapter in a totally different city, or whether you might have family in a big city, but you don't mind living like 2 hours away. So
Right.
Richmond, Virginia is a big one. I meet people from like New York all the time, and I'm just like, what could you possibly have here? It's the cost. Like the cost is much lower, and there's still a lot of amenities, but yeah,
Wow.
there are a lot of cities like that. That's just one example, and I'm biased because I live here and I see it all the time. But southern cities, for one, just still have, and this is, a tale as old as time, because I moved from Charlotte, North Carolina. Before that, I was in Pittsburgh, Pennsylvania. But in Charlotte, everybody was a transplant. And I moved there when I was 10, and I am probably spent more time than 90% of the people who live there. Southern cities have this allure of having a lot to do and a lot to offer and just being great places to live, but still having that low cost of living. Of course, when you move somewhere, and a lot of people from more high cost of living areas move to these low cost of living areas, they become less low cost of living. I like to think that I got priced
Yep.
out of Charlotte, and a lot of people feel the same way. The Rust Belt cities in the Midwest, my first hometown of Pittsburgh, I spent the first 10 years of my life there. My family still lives there. I am kind of baffled by how affordable the housing is compared to Richmond, which is in the South. And these are just examples that I have, opinion based. uh as I was given the green light to give my opinion on those. But
Yeah.
of course I have a little bit of bias because this is my like lived experience. But certainly a lot of those Midwestern cities, those Rust Belt cities, those Southern cities, but not too far south, because when you start getting into Florida, there's the affordability issue with home insurance and the impacts of climate change on the hurricane season, and them just getting more and more ferocious with each season, and the cost to the insurers going up so much. And you're having a lot of insurers their drop people within those states and just leaving states altogether. Florida is one that has a really big problem with it. There's the state-backed insurers, but they're still not affordable. It's these are like the insurers of last resort. Just because they're there doesn't mean they're going to be cheap, because it's not like these insurance companies are able to charge these rates just because they're, Scrooge McDuck, rubbing, their dollar bills together. They have to charge that much because it is so expensive to rebuild after this damage. And yeah, but what is kind of mind-boggling to me is uh the net migration into Florida cities is still it's like the highest in the country. We just had our best places to live launch through real estate, and I did the analysis for that. So I think 7 of the top 10 cities for the highest net migration, so the people who are moving there the most, were Sunshine State. They were in Florida. And I was like, I've just talked to so many people who moved to North Carolina, people who moved to Virginia from Florida, because they simply just like could not afford, your housing payments go up. And that's another thing to consider when we're talking about, your mortgage principal and interest payments, that those don't change. Your home insurance can absolutely get more expensive, and it can totally price you out. So I'd say, yeah, those are the ones that I come to mind where people are leaving. California and Florida are both having these same home insurance problems.
Mm.
What I will say about Pittsburgh, it ranked number 1 for the lowest FEMA risk, so that's a
Oh.
good thing. Of
Wow.
course, the houses are older, so it does cost more to insure. Every single place. I mean, we could go on and on and on, because there's so many cool things about different
Love
parts
it.
of the country. But I will say that the Southern, Rust Belt, and Midwest, while they are still affordable, are places where people are going. And just like I said, drive till you qualify. Just maybe getting a little bit further out, because when you are in the cities themselves, you're going to be paying a premium. If you, can, if you have the sanity to be able to do like the hour-long commute, or, if you work remotely and you don't need to commute every day, if you're hybrid, being a little bit further out can get you a lot more house. It's just a trade-off. Do you want to have that life close to the city, or can you drive, an hour out and not, pay quite as much for your property, as well as typically lower property taxes, but different access to amenities and different types of social services. It's all a trade-off, and it's, like I said, so personal.
Definitely. Definitely makes sense. There's so many factors to consider when you're relocating from like a big city, or just moving to the outskirts is what a lot of people tend to do.
Yeah, of course. And it's something that I think about as somebody who moved into the city. Sometimes I drive a little bit further out and I'm like, wow, it's like so nice out here. Why did I move to the city again? But, with each city, it really depends on, I think, what you were getting at too with the transportation. Those are not only are they lifestyle considerations, they're financial considerations as well. So just, I mean, endless possibilities. And trying to, when you're looking at relocating and looking for, your next place to live, considering the factors that are most important to you, because it varies so much. Somebody who is, a young professional, single, and really career focused might be looking at a different type of place to live than a family with many young kids who have different needs. So really,
Yep.
every person and their needs are just all so unique. And while we can all offer some really great general guidance, it takes a lot of thought. It takes a lot of inward reflection to see what you want out of something, which is why, I truly feel like renting does give you that flexibility if you don't have your compass set for what precisely you want. But if you know what you want and you're like, this is going to be me for the next 5-10 years, buying a house can definitely be, even in this economy, could still be a good move for that stability.
Wonderful. Thank you so much, Erika, for all of your insight. Can you let our listeners, viewers know where they could find you, where they could learn more about you, and all this fantastic research that you shared with us today?
Sure. You can visit money.usnews.com. You can find all sorts of research-backed journalism there, including mortgage rates forecasts, all sorts of analysis on the housing market. And you can follow along at US News on Twitter/X, TikTok, Instagram, all the social platforms is really going to be the best way to find me. I tend to be a little bit hidden on socials these days. So yeah, definitely following at US News. Great place. And you'll find all sorts of data-driven journalism on all sorts of financial topics.
Wonderful.
Thank you so much. Wonderful,
Yeah.
Erika. I truly learned so much today. I'm sure all of our listeners learned a lot. Genuinely appreciate this conversation and the time that you've given to us to, share your expertise. Just thank you so much for coming on Credit Chat Live, Erika.
Thank you so much for having me. I really enjoyed this conversation, and it feels great to talk about relocation, home buying, and everything that comes along with it.